Hey traders, Raghee here, and in this recap video, we're going to cover some interesting things that I'm seeing happening on the daily charts of the major index futures and what that could mean for trend following setups that we've been doing pretty regularly up till now. And let's start with the daily because that's where the story starts. And the fact that the daily has continued to move in a choppy range, that's the very first thing that we have to learn to assess. When is the market choppy versus trending? Now, there are two kinds of chop. There's the wider chop like we have now, but there's a narrower chop that typically happens if the grab candles are mostly blue and if the price action is trading inside the 34 EMA high to the 34 EMA on the low. So that's two different. Now notice we're in no means stuck inside this wave, as I call it, at all, right? And it's a much wider range, and it's a rapid change of red to blue to green. And yet we don't have a nice clear movement higher or a nice clear movement lower. It's stuck in a range. And sometimes the bears are in charge, sometimes the bulls are in charge. I call this a coin flip market. And if you're in a coin flip market, I will tell you, this is the number one account killer, the coin flip market, where some days things are sort of neutral, some things are quite bullish. It's the bullishness that I want to talk about right now. And the fact that we are so bullish at the moment, the big question is, at what point are we going to become overbought, meaning there are some highs here, and one of these likely is going to be the area that this market actually and ultimately finds selling pressure. Now notice we're getting up there. I don't know that we're going to get all the way up to here. We might stall out in this area. There's no real way to tell. That's the tricky part, and that's why I use indicators such as Ready, Aim, Fire, which is a premium indicator, but don't think that there's not an alternative. You can use something like a slow stochastic. Let me show you how I set this up. So you go to your platform. I'm on the TradeStation platform, but you can do this on any platform because this is a traditional oscillator. And what I do is I set it up with a 21K3D. And on the TradeStation platform, it looks a little bit different. 21 Stoke length, smoothing is 3. So that's what ultimately I get here. So what I want to do is, in the same way, am I overbought? And I'm going to be looking to this stochastic to be above what's known as the 20 level. And then eventually you're going to notice this line is going to hook around over this slower line. Now you notice I paint one, the smoother one thicker, and the more twitchy one is thinner. When that twitchy one and the thick one get above 20. So both these lines, twitchy and thick, how's that for complicated technical analysis? It doesn't have to be fancy, folks. When that slower smooth one starts to get above 20, along with the twitchier one, what I'm looking for is the twitchy one to cross back down through the thicker one. And that's really what your signal is. That's really the signal. And when that happens, and it accompanies one of the resistance levels that I'm thinking we could exhaust at, that's the big question mark. At that point, we will have a short sell, and it's what I would call an overbought short sell. And we'll start to see the market roll over. Now, there's another way we can do this. Let me show you another way we can do this. And in the premium video, I'll dive into the actual setup that I'm watching. What I can also do is take a look at shorter term time frames, like a 60-minute time frame, like a 30-minute time frame, and start to look for when and how the market starts to lose ground and start to move to the downside. And I call this an intraday rollover or an intraday wave reversal. It almost will sort of look like price action will almost take on sort of a U, or even sometimes, but rarely, a V-type pattern. So some of you might know this as U's and V's. Sometimes up in this area, we can develop kind of what they call an M for murder pattern, right? Where we have this kind of action like this, which is classic distribution, by the way, before the market ultimately heads lower. And then sometimes it just kind of smoothly heads lower as well. So whichever variety it is, the candles and the grab are going to adjust accordingly. And that is what we're going to be on the lookout for. So I hope that gives you an idea of something that I think is happening, not just in the S&P, but I think we're starting to see very interesting signs that something similar, we're reaching those heights where something similar could happen in the Dow. Now, I am not a negative equities person. I know there's a lot of people talking about all the terrible things that are going to be happening in equities. All I'm saying is this is a choppy market, and we've gone from one end of the chop to the other end of the chop. We were in the choppy area here, and now we're going to the choppy area up here. And all I'm expecting the market to do is possibly remain doing what it has been doing for some time. And I just want to be aware that as I'm getting into this area, maybe a little bit higher, maybe a little bit higher, I don't know ultimately where it is, where is that rollover going to occur? So rather than guessing at what level it's going to be, I can go to a shorter term time frame and take advantage of that U or V pattern. Okay, so a couple things I've shown you here, how to look at overbought, oversold in the daily, how to take advantage of that intraday, and then that is what I'm going to be looking at in the coming days ahead. This is something that's happening right now. I'll see you in the next update.